All right. Good morning, everyone. Welcome to this live intraday strategy webinar. Today is Thursday, April 7th. Mike Boutros with you on the horn. Hello, Aurelian, Ted, everyone in the room. Good to see you guys. To close out the week here with the dollar just continuing to just rip. Now, I showed you a chart yesterday in the setup. We may be coming onto some near-term resistance here, as ridiculous as that sounds, but we'll definitely take a look at the levels. It's been quite a stretch for the dollar. I think we're going on 4 days now. And while the broader picture still looks up, we're heading into near-term resistance. This latest leg, charged by this week's commentary by Fed members, whether it's Brainerd or whatever, all seeming increasingly hawkish. Markets have all but priced in 50 basis points at the next rate hike. The question is, does that become a 50-50-50 to the end of the year? We'll take a look at CME expectations if you want later, guys, but we're pretty much just factoring in, pricing in higher rates. Now, all the same time, the risk markets seem to be very fragile. I showed you the chart of the S&P a couple of days ago. That's still right in line, hasn't changed one bit. So on the menu for today, we'll hit DXY, Aussie dollar. Also a good opportunity here, possible for a fade opportunity, dollar yen, sterling, SPX, euro, dollar CAD, gold, and a look at where NASDAQ is trading. As always, guys, any other questions or trade setups, feel free to throw them on the message board at any time. Let's jump right in. Yesterday's update, here's what it looked like. Wanted to give you the full suite of the DXY, just to give you kind of a picture of where we head into the close of the week. TAI, S&P, I got you. NASDAQ, I got you. Dow, okay. 10-year. Crude and silver. I'm not into the crude trade, guys. It's one of those things where you just got to be in it. I hate to say it, in it to win it. You got to be in it for the long term. You got to be able to withstand some pain. Yes, the broader trend is higher. In my humble opinion, the fundamentals, the technicals all support higher prices. But in the near term, there's been such a spectacular rally like that will deserve its washouts, and the washouts will be pretty mean. You saw us hit 130 and come back 129, 128 or whatever, and come all the way back to 100. So I'll show you the levels, let's say the least. And silver, I got you on that, TAI. So all on the list. Here's what the dollar looked like yesterday. So the 75% parallel of the slope, okay, it essentially caught last year's high. There's the drive into it last month. Here we are again, okay, for the pitchfork. So it's another possible exhaustion point. You look at the momentum, this is the third divergence reference point if we were to close at these levels, right? A series of higher highs, a series of lower highs. So it's primed for the exhaustion trade, but the conditions aren't there yet, right? The signal isn't there yet. The mean washout, as it were, that you'd want to see, I don't think we've seen yet. Here's just the beginning rumblings of the first down day after 1, 2, 3, 4, 5 up days, right? Here we are. So this is the same levels that we've been watching for quite some time on the daily and intraday charts. It starts off at 99.63, goes into 99.66. The 1618 extension from the advance off the yearly low, 1, 2, 3. It's the 2019 objective swing high. So from all point in case, we haven't closed above that yet. In fact, we closed right into it yesterday before pulling back. TAI says, waiting for the washout, you will get it. My humble opinion, I do think so as well, TAI. It's really hard for a trend after seeing this magnitude rally from support to resistance in a straight 5-day shot to get enough oomph, right, behind it to get up there unless there's something that comes out. A much like a washout in stocks, God forbid, some really, bad news or something catastrophe. I guess it is a catastrophe from a humanitarian standpoint, but a further catastrophe or further intensification of what's going on here, something, maybe you get the fueled breakout, but man, it does look a bit tired here. right? So watch today's close. Again, we've just opened up the first few days of the month, first few days of the quarter. I'm very dubious to what I see in price here, right? I tend not to trust it until we let that smoke clear. I think we'll get some clarity here, but watch 99.60, 99.63 on the upside. Here's what the intraday chart looked like. I showed you this last night too. Super tight channel. I mean, this is 5 days now that channel has been just radically tight. This was the 4-hour I showed you yesterday. Here's what the 2-hour looks like. Still really, really, really tight. So could we, go a little bit more here? Yeah, sure. But at the end of the day, near-term correction maybe with a breakdown below this. Near-term support I noted yesterday, 99.33. That's the February 2020 high week close. Really nice pivot in price, break above instant support. Watch for a level there. All right. Ideal scenario, okay, again, Mike Boutros and his rainbow, fairy tales, is you do get one more push failure and then the quick washout. At the end of the day, if we get a push below 99.33, I think that'll be a near-term mark there. Now, on the other side of this trade, right, this is if we get the dollar pullback, that would actually be Aussie dollar higher. But if you're trying to hedge dollar exposure, I do think Aussie is coming into a pretty big level. Any questions on dollar before we move off? The biggest player, and I'll show you later in the session, is going to be dollar CAD as we head into tomorrow. We have employment data there, but let's head towards Aussie. Yeah, here's the daily, Ty. Really stretched, 5-day advance, resistance. And again, we're not just looking at that lateral level, it's that slope. It appears on the weekly charts. It's given resistance on the weekly charts, and we're there. All right, so dollar is knocking on the door. If there's going to be resistance on this slingshot, this is the spot to look. Aussie dollar, first up on the weekly charts, looks like this, pretty darn clean, okay? Now the level is, or the threat is the exhaustive trade, as I said earlier today. I showed you it yesterday as it was probing, okay, that 618 retracement of the entire yearly decline. Here's what it looked like yesterday. We were still actually had a positive candle here before reversing on the weekly. But at the end of the day, initial resistance we had at 75.31. That never cleared on a daily close basis. So the fact, or on a weekly close basis rather, again, this is the weekly chart, but the fact that the intra-week high spiked past that 618 and pulled back, this is actually very indicative of an exhaustion trade. Look at where momentum is. It's the first test of 60 since breaking the downtrend. Remember what we always say, in strong downtrends, resistance at 60, in strong uptrends, support at 40, right? We've obviously continued to break below 40, break below 40. This is the first test of 60. Likely get a little bit of a pullback here. On that pullback, 40 would need to hold if we are heading higher. So that's just ways I like using RSI as sort of just added emphasis, added evidence to give me further conviction in the directional bias I'm looking at. So something to keep in mind there. That said, looks like exhaustion. Watch this week's close. If the week closes like where we are now on this big, it's not a reversal candle because we actually closed lower last week, but this big outstretched, tail, shooting star, whatever you want to call it, it would highlight the threat for further pullback in Aussie. A good hedge. This is actually Aussie weakness, dollar strength you're trading. We just talked about dollar into resistance, but this has been bucking the entire trend, right? Aussie's been rallying with the dollar as per DXY, which again is 60% weighted euro. It's very heavily skewed there, but just to put things in perspective, sort of that good hedge. Daily chart for Aussie dollar looks like this. Here's what the daily chart looked like yesterday. Looked like a decent reversal in the fact that we closed yesterday back below the median line. So then right off the bat, in my mind, I'm thinking, okay, that was like a false break of the upper parallel, and you close back below the October high day close, back below the median line. Now we're just looking at monthly open support. We're trading there right now. 74.83 is where we open the month, looking for reaction. If we break below this level, right, it's really early in the month to call it a monthly opening range break, but I feel pretty comfortable doing that just because of where we are in price and where we are in time. okay? So again, highlighting the threat for possible weakness. Here's what the Aussie weekly intraday chart looked like last night. Really strong spike, came right back into the weekly open. That's the break you want to see. Just a little bit lower. Remember, weekly open was 74.97. We just talked about the monthly open at 74.83. So you're into some junk here, right? But if you do get the downside break, again, that break of upslope support, you're looking for that deeper drive towards 74. Here's what it looks like on the intraday chart. So we're essentially testing a break of the weekly opening range lows. But again, that's why I put that target at 74.56. That's on line with trend, and that's on line with last week's low, sort of a better spot, if you will, to kind of mark the pivot, the break lower. Then you're looking for 73.96 is a basic 38.2 of the advance. You got the September 2020 high, which comes in at 74.13. You're essentially looking for 74. Okay. Immediate resistance, like the first place that would be, I would want to see, we've already started to see some spikes of it right here at the weekly open, but bearish, I shouldn't say bearish because we're still in the bull trend, but the level I would need to see hold resistance would be any approach at 75.43. If this is going to work and we're going to limit out down at 74, you know, my stop's up here. I don't want price getting above 75.40. So that's how I'm playing Aussie. Looks like a decent run. We'll see if the exhaustion has some follow through here today. Remember, this is dollar strength, but the outlier in its own merits of the technical formation we're in here for Aussie. Questions on Aussie dollar? You do get Australia employment figures earlier next week. I believe it's on the 13th here in the US. So maybe a driver there for a catalyst for some price action from the Aussie side, but keep your eye on this. Keep your eye on this pullback. All right, that is Aussie dollar number 2. Number 3, dollar yen. You know how I feel about dollar yen. I'm currently not involved in this at the moment, but I've been talking about this trade with you guys for a couple of days, and it's still just continuing to do its thing. Remember, dollar yen's on a radical breakout, but we're testing trend extremes, okay? Here's what the breakout looked like. It looks like on the weekly chart. Last week, although we broke uptrend resistance, we did not close there. And in fact, the spike went right just shy of that 25.28 level, which is the swing high from August of 2015. Some slope there. It's a possible parallel just for some fruit there. But you pulled back and closed below the slope. So we're looking again, is this a possible exhaustion trade? Well, we're at near the weekly highs now, but the weekly highs are at a pretty critical level in and of themselves, okay? On the daily chart, this is all I want to sort of highlight from the daily chart. Again, same slopes you're looking at, all parallels. Here's the high day close, 23.81. Look for a daily close above that to keep the upside bias in play. It's trading above it right now, but we have not closed a daily candle above that level. So pencil it in, 23.81. Here's what the intraday chart looks like. Now, if you get some flavor and you get a little bit closer in price here, okay, you can see a whole cluster of things. 23.81 sits right in the middle of the 618 off the high and the 100 off the low. I tell you guys about these formations every time I find them because they are my favorite confluences. Within that range of between the 618 and the 100, we have the high day close. So any way you slice it, this is a key range. We highlighted it early in the week and we've been stuck in it literally for the last 3 days. So at the end of the day, a breach above, it's basically 24, right? 23.99 here at the 100% extension would put you on course right towards the upper parallel, your 24.60s, I think I marked in the report. What 23, yeah, 23.60s essentially. Any higher than that, 25.10. That's the objective swing high. So looking for something here. It's the abomination. I have an enormous amount of respect for this trade. It's been, you know, my worst pair over the career, of a 20-year career here. So, but the levels are pretty clear here and mapped out. We just need some directional bias break. near-term support 23, bullish inval 2260, that's the weekly open. And again, on the upside, those 2460s and the highs. Easy setup, it's just not a clear directional break. If you look at even momentum here, it's like, you know, what the heck's this? If this is a strong uptrend, you found support at 40, right? But you haven't been able to get much distance here on the upside either. So, you know, something like this is noise at this point. And if you look again on the daily charts, momentum is still in overbought condition. So that's why, you know, I don't want to get, what's the word I want to say? I don't want to get excited about trying to fade it here, but the levels are where we want to see. At the same time, if you want to join the trend, let's say you still want to take a long position here, if you're not already in this, you know, where's a respectable stop you're chasing? I mean, you could put a stop against the low here for a really tight range trade if you're looking for the breakout, but just be careful on this one to the close of the week. All right, that's the abomination. Number 3, dollar yen. Number 4, here's British pound, a sleeper sell. This one's been pretty quiet, all things considered for the week, but we're still trading at a pretty major level. Here's sterling on the weekly charts. The decline, the breakdown, excuse me, of the yearly opening range saw us drive right into the 1618 extension of the advance off the yearly high, of the decline from the yearly high. That was 130.06. The low registered at 130 proper. Okay, rally right into the median line, former support, turned resistance, nothing special there. The pullback, finding support along the slope. So I don't know if this doesn't have another leg higher. If the dollar pulls back, you might get one more corrective move. So I'm kind of on the sidelines here. Again, a trade I haven't actually personally participated in this week, but here's what it looks like on the daily chart. Here's what the daily chart looked like, or here's what it looked like a couple nights ago. Show you the intraday chart in a moment. But week from the start of the month, kind of messy. You've got clear-cut resistance at 31.67, 32 is bearish inval. That's the breakout zone. But on the downside, it's not really a consolidation. It's not really a clear downslope. So something to put on the watch list, guys. For the days ahead, sorry about that. So levels haven't changed. Here's what it looked like back on the 5th. Support at the 618, resistance at the 38.2. That's now your weekly range. 32 is going to be the breakout. If we break lower from here, I think it's going to be a more accelerated drop. I don't think you kind of do this meander. If we break those lows, you know, 130, 129.30s would complete 2 equal legs off the high. That might be a quick order trade. So till it does, it's a weekly opening range that is preserved. So it's a weekly opening range play, plain and simple. Okay, and you have that same type of thing on gold even. We'll talk about that in a moment as well. Any questions on sterling? It's been a while since we covered it. And you do get sterling employment figures, GDP figures early next week, maybe something that gives this thing a kick, but it's just been boring this week, I think. So I'll leave that one there. Dollar, yen, and sterling, things that we have on the watch list. All right, here we go into the first of the indices, SPX. It's been phenomenal. I really can't, or I have to say I'm really impressed. The levels that this thing has continued to follow, guys, our guidance on the weekly charts has been phenomenal. The levels have been spectacular. I continue to show this to executives over IG and Daily Effects. We've been calling this trade back and forth. 141.97 was critical support. We highlighted that on the way down. It's a basic 236 upslope parallel. We spent 3 weeks trying to drive lower, never closed below. Never closed below. We marked an outside week reversal off the lows. Again, all the arrows you see represent the times we've seen outside weekly reversals in trend. So it automatically shifted our focus to the recovery. 2 levels we highlighted, 45.47 and 46.77. We turned just ahead of that last target. It's the high we closed for the year. Note that we never closed above the 618. So 45.47 essentially held. Okay. And then as we drove down into deeper price, which I'll show you in a moment, it started to look very toppy and decent pullback, and that pullback is manifesting now. So no change here on the weekly charts as it pertains to the SPX, right? Right in line, still holding there. The daily chart back on the 5th, again, posted an outside day reversal on April 5th. Automatically, that turned our focus lower. Here's what the SPX looked like again on the daily chart. And there was your outside day reversal on the 5th. After we highlighted that, said, what? Look for a move back towards basic slope support. A basic 38.2 of the advance off the low gives you 44.39. We're just skirting that now. We might even still get the drop, but you can see how well defined that played out. Here's what the scalp looked like back on the 5th. We identified a near-term descending channel formation. A couple of slopes off that gave us further guidance on that pivotal zone down there near uptrend support. Haven't quite gotten it quite yet. Here's what it looks like. All right, you still might get it. You still might get it. But we're basically looking for an exhaustion low here. Now, that just means my direct focus right now is lower, but I want to see inflection here. This could be a decent position that actually reverses and gives us the bounce. On the other side of that, guys, this should be a major inflection zone in price. Don't take my word for it. Here's what it looked like in previous price action. On the breakup, acceleration, instant support. On the test, instant rejection. Take it even back before the 38.2 comes into play. Back here, just this objective January low day close, right? Break below, instant resistance. Break above, support, acceleration. Again, resistance, 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 breakout. That converges on our upslope today. So I'm looking for a reaction down here if we get it. Near-term resistance, I'd still put near that 45, 46 level, the 618 that we're looking at on that daily chart. Excuse me, I took it off the daily, but that 618 that we're looking at on the weekly, okay? I'd still put that as resistance. Bearish invalidation right at that median line confluence, 45.60s. Anything northbound of that, and you look for the resumptive move, right? You look for the resumptive move. Remember, at the end of the day, we are playing a breakout. So if this breaks, it would suggest a deeper correction will be underway in stocks. 43 would be the first zone you'd be looking for. That, guys, may be something that puts a floor under the dollar, right? Some risk off. Maybe gives us the fuel break that we need in gold. But the pullback that we've seen just all remains within the broader context of the uptrend still. So we haven't necessarily made any major pivots that would suggest a larger sell-off in stocks yet. And that's with a capital Y and a capital Et, okay? All right, so that's SPX. Any questions on that, Ty? Did you get all those screens? That's the 2 hour, and then again, the daily. No changes from any of the levels that we've been looking at from that last update in price. Okay, that is number 5. Number 6, going backwards here. I didn't show you Euro, but here's Euro. I find myself a little aggravated on this. I'm not gonna lie. I got stopped out in this an overnight trade, guys. I actually took a long with that dip there yesterday. You know, really nice tight stop. It worked out, went to bed, washed out, stopped me out, and came right back. I think you're putting in a near-term exhaustion low. You're seeing that manifest itself with it don't know why it doesn't want to give me my momentum here. Okay, anyway, here's what the momentum looks like on the 2 hour. So, right, you're seeing on that last drop yesterday, really nice recovery. So I thought it was gonna kind of hold it out and see if we could get a larger just bounce, right? I'd be in the money right now. Initial level was 109.50, and then the weekly open comes in at 107, 110.70, excuse me. But it didn't work, or at least not for me, right? Maybe the stop was put too tight, but in any event, I still think that has some merit. We looked for euro support early in the week. Nothing triggered, so we didn't get stung there. The break cleared the focus for a move lower. Here's where we dropped into. A little bit of a bounce, a little bit of a bounce. A lower low is made in price. No lower low is made in the oscillator. Hopefully, again, you'd need to see a break above 1937 to get the play. Maybe I get another opportunity if we open up the US trade session, it dips down, it holds 108.80. Might be another opportunity to try to fade that. But at this point, it's already too far gone for me to try to chase. So keep an eye on euro dollar. I went backwards on this just to give you exact look here, but here's what it looks like on the longer term charts. You know, the break is not clearing the yearly lows. In fact, I'm not sure why it got deleted. This is the yearly low week close at 109.10 that we've made so far for this year. So we're still in this key range, guys. This is the same chart we've looked at since the open of March. Okay, 108.30 support, 111 resistance. We got to clear out this godforsaken range before anything gets to be a more definitive conviction setup for euro. Daily chart has us at downtrend support. This is the same pitchfork we've been following off last year's highs. Nothing's changed. Nothing's changed. There's the dip into the lower parallel last month. Again, didn't like where we turned from, but it was a beautiful outside day reversal. So that automatically shifts your focus lower, sort of is the end of the month, end of the quarter, all that good stuff. So I don't tend to believe that. This was actually a very ominous sort of exhaustion signal already. Here's the break. We've already taken out the 618 slope support. If today marks an outside day reversal off the lows, then you got a little bit more conviction again for this possibly being a near-term sort of recovery in euro. Questions on euro? Here's what it looks like, again, on the near term. Hoping to get some clear-cut formation here. It was way too steep. It's just like euro or DXY on that part to kind of give us any of a conviction channel on this one. So looking to see if we can't base a little. We'd need a breach above 110.30 near term, which is the weekly open, for us to validate any type of meaningful reversal here in euro just yet. Questions on euro dollar? All right, that's number 6. Number 7, dollar CAD. You do have Looney employment figures on tap tomorrow, expecting a print of 80,000. That's well below the 336 they got previous month, but the unemployment rate headline figure is expected to downtick to 5.3 from 5.5. So maybe a market mover. I don't know that it will be. It's not one of those double whammy with NFPs, but here's what dollar CAD looks like on the weekly, and here's what we've been tracking in the updates. It's been a decent setup, or it looked like a decent setup after last week's exhaustion off the median line, okay? It just so happens it wanted another test of the median line before we turned higher. Here's what it looks like on the weekly charts. It broke below this formation that we've been following from last year. It tested it as resistance last week, so I'm not willing to ditch that slope just yet. If we do break back above that high, maybe get a new formation. I don't want to get married to it, but I do want to see if there's any, if there's anything to that slope, if there's anything that offers resistance here. I know Jamie's looking higher on this one. I love how it based, and this is again objective stuff. 124.50 is your yearly opening range low. Not Mike Boutros's opinion, not Jamie's opinion, fact, right? So we haven't even broken the yearly opening range yet, and we've simply come into support. Do you rebound a little bit higher? Maybe there's no merit at all to this slope. We'll see. We'll see. Here's what the daily chart looks like. Okay, that's the same pitchfork I just showed you on the weekly that we're kind of judging here. Here's the pitchfork that we drew. You can tell towards the end of the week, isn't it? We've been following off of this last year's late high and this year's high. The median line, perfect support. Like I said, it wanted one more drive down to touch that median line, but 20 24.77. That's the low day close that we had for the year. Forget that. That's not the low day close anymore. Just the swing lows. Again, the yearly opening range low never closed below. That 100 has no merit really here. That's just 100 from the decline off last year's high, but I kept it there because it grabbed the lows. You can tell that even that level at 24.70 wasn't broken on a closed basis. So I'm kind of, you want to take this, one step at a time. Excuse me. If this is an objective break of that near-term multi-day range, and this is a break of the down slope, that's the last ditch effort. Like I said, I want to see what happens here. 25.80s. We break through that slope, look for a rally towards the yearly open. That's 24.60 on the ups, 26.40 on the upside there. Here's what it looks like on the intraday. Okay, little teed off. I didn't get to catch this one either. That one looked like a perfect touch on the recovery yesterday. Was the perfect opportunity with a stop against the low. You'd be in the money right now looking for a 25.90. Again, I didn't get to snap into this one, unfortunately, yesterday, so I'm not going to chase it, but this is the level we want to look at. It just so happens, right, that 25.80 level I just eyed on the daily charts, on the monthly, on the weekly charts, yeah, it's also now a basic 38.2 of the drop, and just a former swing low from March. So look for reaction here. Again, strength beyond this, then I'd look for yearly open 26.40, a 618 of the drop, 27.10, no problem. But we've got to pivot with some certainty, I might add, above this level. All right, if this is going to work, weekly open would need to hold support. So 25.14 max on any kind of pullback day. That's the max you'd want to see if we are heading higher here in dollar CAD. All right, a little bit different interpretation, I think, from what Jamie's looking at, but same concept, same premise for the setup. All right, questions on dollar CAD. Employment figures on tap tomorrow morning at 8:30. All right, that is number 7. Number 8, here is gold. So the gold trade has been trapped within the confines of this weekly opening range we highlighted very early on the week as we were opening and just setting up right above trend support. Here's what it looked like right into the start of the week. 2 levels we noted, 1913, 1918. I didn't add the shaded region here, forgive me, early on, but this is what it looked like into the Sunday open. And we said, looking for a low off one of these 2 levels if price is heading higher. Here's the start of the week. We drove right down. If you took a long there, you actually had a decent trade that stretched into 1945s, pulled back again. All we have now in focus is an objective weekly opening range. If you break the upper sides of the weekly opening range, you look for a late week high. If you break the downside, you look for a late week low. The longer the range holds, the more conviction you have on the break. Okay. Now beyond that, I just want to note that even if the weekly opening range does break, we can't ignore resistance. Resistance is resistance and support is support. On the upside, I've been talking to you about 1950, 1959, literally for 3 weeks now. Okay, so we flirted with the top side break there. Excuse me, never marked a close, pulled back. We failed again there last week on Thursday, pulled back. That's the level, that's the pivot. Don't take my word for it. Look at price that we need to clear for the upside in gold to take command again. All right. Now, a lot of people are also, again, I don't recommend you guys follow too many people on Twitter because there's a lot of noise, but a lot of people will also be looking at this as maybe a near-term consolidation pattern, whether it's these 2 highs or whether it's just even, I would even be using just the recent highs that we made from last Thursday and sort of this recent high, right? Why can't I get this to snap? Sorry about that. So it could be a near-term consolidation as well, but either way, it's proving the same thing, right? If the breakout of the downtrend that we noted last week is legit, breach of resistance, test as support, on our merry way. We got to pivot back above 1959. Okay, now if the dollar pulls back, as we just said at the beginning of the webinar, dollar's really pressing resistance, that might be the footing that we need to get this gold trade to get a little bit more of a pop. But until it does, weekly opening range play, plain and simple. Just to go backwards for a second, here's what gold looks like on the weekly charts or on the daily charts. You can see that the monthly opening range for April also taking shape right above 1918. That's the 2021 high day close. Same level here, 1918. I'm sorry, I'm a little dyslexic this morning. So that's same level. Monthly open resistance, not highlighted on the intraday chart, is 1937. But once again, 1950, 1959, that's the key resistance you need to clear. And a multi-week resistance hold. Here's what it looks like on the weekly charts. We stretched just shy of the record highs, pulled back. Your high week close is 1988. That's what we need to close a weekly high above to mark resumption of the broader uptrend. Key support 1903 into 1920 here on the weekly charts, highlighted a little bit more certainty. Questions on gold? All right, last but not least, number 9. I know we threw a lot at you today, guys, but there was a lot going on this week, was the update on NDX. I know you want to look at this, Ty. Here's what the NDX looked like earlier in the week. The pullback is still holding within the confines of the uptrend. Let me take you back. Here's what the NDX looks like on the weekly charts. I want to highlight that on this one, the 52-week moving average has been picture perfect pinprick. Resistance, breakout, support, support, break, acceleration on both sides. Break to the lower side, instant resistance. 52-week moving average, instant resistance. I got your list. I'm still going to go through all of those. Don't worry. Don't worry. So 14,876, that's where you got to close above on a weekly standpoint to mark resumption of the uptrend. You saw that we didn't even make it to that 618. Same thing. The SPX did make it to the 618. We never closed above it. NDX didn't even make an intraday stretch there. So again, possible exhaustion for this recovery. We're now at near-term support. That's the yearly low week close. Again, just like the SPX, you had an outside weekly reversal, which shifted our focus higher, failed ahead of our first target. So it wasn't as clean a trade as SPX. Didn't even make it into target 1. But here we are with the pullback. This is support. Watch this level here today, Ty, 14,420. It's the low week close. You need to close below that this week. I guess not today, tomorrow. You need to close below that this week to validate exhaustion. I've then been looking for a lower move next week. Here's what it looks like on the daily chart. There's that level. This is actually, this is 14,455. That's just those swing lows there. Decent pivot. But let me bring this low week close to the forefront, just lower. Okay, I'd work with that now more importantly. Keep that on there. And a basic retracement off that low. 38.2 right there. Yeah, you're at support on the NDX today. 2-day. Okay, so it's a 38.2 of the advance off the yearly low. There's the 2022, this year's low week reversal close. Keep an eye on what happens there today. So it is important today. It's important today as well. End of the week is going to be the real tell, Ty, but today is going to be a tell because we're sitting there right now. Here's what the intraday chart looks like as well. I might as well add it there for you too. I've been looking at that 38.2 already. So maybe lowers the slope on an intraday move, but at the end of the day, you're testing near-term support as well. And the one thing I was looking at with this, I don't want to put this as a hindrance or something that would necessarily dissuade us, but if it was going to be corrective, you kind of would have wanted to see 14,006 hold. It's funny because that's holding resistance now. The 1618, excuse me, extension of that drops you down even lower. Like I said, 14,300 maybe on an intraday stretch. So let me leave that 1618 on there for you. Look for something like this. This is a key zone. Watch out the downside. Don't get clever. Comment on the gap. Yeah, well, Ty, the gap fill would take you right back near support or near resistance. I wouldn't even worry about that. Your April open is at 14,886. Don't worry about the February open at this point. Right? That's near-term resistance. So even if you rally just towards resistance, that would fill the gap. High likelihood these gaps fill. It happens all the time. Here's what happened on the last gap to the upside. Intraday, we went right for a gap fill and then we moved right off. These things happen all the time. So yeah, but you could get something like this first, which is why it's not like an automatic buy. You still have to abide by all. You don't expect the gap to fill. Ty, if that's your expectation, then you're just holding, you're sitting on your hands here. If someone's looking for new positioning, that would be sort of where you'd look for resistance if this rallies. Okay. If you're someone who thinks you're clever and you're playing the low here, that's my problem. Is you got to wait for the open of the session. You still might get a drop and a test of that 1618 before the larger recovery, something like this. But yeah, there's gap fills are classic easy trades typically. So, yeah, so you're asking me, Ty. Oh, you're not saying you don't expect it to fill. You're asking me. Yeah, I do expect it to fill. I do expect it to fill, but it's not a trade from a long here. I still have to abide by all the same trade parameters that I do on all my setups. I need something to get me in to suggest that we are marking a near-term low, maybe a trigger break in momentum, maybe an exhaustion low early in the session to get a better stop, but that would be the idea. And even ahead of the gap or even beyond the gap, a test of the monthly open wouldn't be outside the realm of possibility. Can we have RSI? It's weird. I don't know why RSI is not coming on this. Let me see if I can add it again. It's not going to be my my settings here. I don't think I have a template for my RSI settings, but so something like this. So yeah, you're right. You just broke the 40 level on the upside. I think, again, it heads lower if we break this. This is a big pivot point. That would still be sort of where you'd want to re-enter it. And for the recovery there as well. I'm just so used to my RSI settings. I'm not sure why they won't come up there on this chart sometimes. Have any guys, first of all, are all of you guys using TradingView? And if you have you been seeing any problems with the buffering or anything like that? I do talk to the owners actually of TradingView every quarter once in a while, but I have been seeing issues on my end. I'm not sure if it's just on my end or not, but feel free to share. In any event, that's everything that I had on my list. So let me go through some of the other setups that you guys were asking about. For the Dow, it's one of the cleanest out of all of them from a daily standpoint, and not the daily standpoint, from the weekly standpoint. I showed you guys this early in the week as well. Beautiful rebound. It's the only one that didn't give us an outside weekly reversal in the recovery, but we never even broke downtrend support. Perfect touch. Intra-week, right into exactly where you'd want to see it fail. Recovery into the 52-week moving average. Again, this one drove right into the 618 and failed there as well. So it was a very nice sort of recovery play. From here, how deep does the pullback get? Okay. The realm of 33,700, 33,500 is sort of what I was looking for near-term support. We're not quite getting as much downdraft on this one as we have been. So I don't have anything on the near-term front for you that I'd be actually comfortable putting on a position. Here's the basic pitchfork I've been showing you since last week. So if this is in play, okay, at this point, let me clean this up for you a little bit. a little bit higher above that slope. And if it's a simple corrective move, the 100 should really govern the low. That's the thing. I don't really want to get too married to this slope. If we marry the gradient, so what I'm doing here, instead of using the objective low, high, low, I'm just going to copy this slope, right? Basic trend line off the support. And if I match it to that same gradient, the lower parallel opens up a possibility for a deeper correction towards the 618 or even that 100 before resumption. A basic 38.2 is lower. You know, it's hard to interpret a little bit on this one because the momentum just hasn't been there. And if this breakout is legit, like what the hell is that? So I just like this on the weekly. I think it's the clearest on the weekly. And on the weekly would suggest look for a certain near-term pullback. Near-term pullback should be governed by 33.7, 33.5. If you highlight these levels here, here's 33.7, here's just below 33,005, 33,456. So maybe a little bit lower from here before we start to move on to the resumptive trade. But for me, the reason I don't like it is because we're right slap in the middle. It's not really easy from a positioning standpoint to do anything here on the Dow. So take that for what it's worth here on the near term. Ty, if you want to take a snapshot of that. The US 10-year has been on a rip, I should say, on a wrap. Here's the 10-year chart I've been showing you guys. So 257, 256.9 just broke. I mean, 270 might be a level, but it next measured move is like somewhere around 292. It's a clear-cut breakout, clear-cut breakout. Here's what it looks like on the weekly chart. Big levels. Watch this week's close as it pertains to 262. Watch this. It's a 786 from the entire drop off that 2018 high. But what do I always tell you guys? A breach of uptrend resistance can oftentimes be the sharpest part of the rally. So this shouldn't be too surprising though, right, Ty? I'm not sure what you're looking to attain from this, but shouldn't be too surprising. We're seeing yields rip because, again, the expectations, the Fed's getting super duper aggressive on the hawkish side, and you're talking about 50 basis point hikes at a time. Now, what's interesting is that everyone who's been looking at the 210 spread and screaming, oh my God, recession. Remember, I told you guys to take this with a grain of salt for a very specific reason, in that the timing aspect of this has no value. It's just telling you the conditions are there. Certainly, we've been, I highlighted this for you before, all of these, again, the tech bust, the financial crisis, we skirted recession ahead of all of the times that we spent time here. We've had recessionary times, except for this last one. Which we skirted right ahead of COVID. Look what just happened. Last week is a disaster, right? This is a weekly chart. We closed down here, all the headlines in every single night, financial news publication, yield inversion, yield inversion, yield inversion. Here we are, right back above. What is everyone gonna get bullish now all of a sudden? My point of being so sarcastic with this, guys, is to take this stuff with a grain of salt. I'm not saying it has no value, but I'm saying from a trading standpoint, it shouldn't impact what you're doing at the moment. Something to keep an eye on. Certainly, if we break if we break some of those uptrend supports in SPX or NDX, then yeah, maybe okay, we broke uptrend support and we're seeing yield curve version. All right, maybe we are in a larger correction, a larger downtrend, a larger recession even. But be careful, because just as the news headlines starts to get ridiculous, that's when actually the trade is over. It's not the time to listen to them. It's the time to fade them. Can you please do DJI on SB regularly? I will, Ty. Again, I tell you guys what I'm trading, what I'm looking at. Like I said, DJI, it's clean on the weekly. The intraday hasn't been as clean, but I will try to keep that updated. And if something comes up and I get a little bit more clarity, sure, I'll be more than happy to put that on there for you, Ty. No worries, sir. All right, last two real quick. I got about 10 minutes left here. Is silver. We went to full session today, guys. You got your money's worth. Here's the full silver trade. hasn't done jack, Ty. The silver trade has been super boring. You know, a little bit more of an outsized monthly opening range taking shape here, but this one is, again, I think it's just worth kind of checking out on the weekly charts and play your way from there. If this breakout is a breakout of the early opening range, then this basically should hold support. That's your high close, your high week close from back here in January. It's a basic 50 of the rally, so took half back. We'd need to basically hold these lows. Now, again, as you drill down into the daily and the intraday, you know, it's not really a clean break lower. You know, I'm not really convinced, let's just say that. So, Ty, I know you have trades that you always want to track and fall in love with, but I would caution you from just getting involved into a trade that you're just comfortable with because of the asset class, when there's no clear directional guidance on the charts. So this is, you know, largely still in the contractionary zone that we talked about earlier in the week. You know, I wouldn't put it past this thing to drive all the way down to 2350 and then rally, but the same respect, you know, I'm not going to chase this. Do nothing. Yeah, on Ty, I would have to say it's a do nothing, just watch for now. You know, I'd still say that, you know, 25 proper is going to be a breakout. That would clear the consolidation range. That would clear uptrend resistance. You know, that would be a clear-cut go. But from here, yeah, this could go either way. It could drive into support, then rip higher. That's going to be the reversal trade. Constructive broadly above 23 on the larger term. All right. On gold as well, looking for a washout to buy. I don't think gold needs to be quite as deep a washout. A little bit tighter of a contraction, very well defined range in gold. Anything sub 1913, I'm out. You know, I think you get the larger decline at that point. But a little bit cleaner, I think, for sure on gold. Okay, guys. Oh, crude. Your last look on crude. So here's the crude trade. Again, I caution anyone on doing anything on this because the corrective stance, if this is a larger correction, could see this thing dip like towards 88. And this is, I don't want to just be throwing numbers at you. This is something I was checking out earlier. So if we're just going to call this a correction, then you could still drop even deeper. You can still drop down as 81. The broader trade would still be constructive, but now you're talking about taking levels out from even pre-Putin, right? Here's your monthly marker. I never dropped it for you guys. Sorry about that. Here's your monthly marker. So if we drop pre-Putin, is that okay? Everything's fixed? No. Prices were going up previous to anything happening there. So, you know, you can't ever put aside on a range of this size, guys, some sort of even, you know, mean washout. Oh, people, you know, I was talking, again, anecdotally, I was talking to people yesterday, and a good friend of mine, we were talking about prices and seeing like, well, you know, Biden released the strategic reserve, so I think everything's gonna be fixed now. Guys, 1 million barrels a day is a drop in the bucket. If you think that irrespective of your political stand, if you think that a million barrels coming online is gonna quote unquote fix the oil problem, then I don't know what you're reading, but I'd like to read it too. So it's a sheer sentiment trade from here. Fundamentally, I think you look higher. Technically, it's a breach of uptrend support. Even if it drops again into these levels, you know, like you could still see a meaner, you know, larger rebound. For me, it's a hands-off trade. It's a hands-off trade at this point. I need to see a mean sort of spike low. I think this was a decent position back with that price test last month. One day there, one doji day there, breach higher. This could have been a decent run. You could have caught 50, 40 bucks on it. Even the reversal off the high, maybe a decent run into 99, into 100 proper. But from here, I think it's much trickier. It's much trickier. So, you know, this is why it wasn't on my list, Ty. Take that for what it's worth. I don't know if that confuses you or helps you, but I just don't see a low to trade against here. So And it might just end up being a decent monthly opening range. Look, if that holds right there, that's last month's open, by the way. If that holds and maybe you range here for a couple of days, maybe contract, maybe get the breakout later. But from here, it's a neutral trade. All right. Okay, full suite and full menu there today, right into the close of the week. I hope you guys appreciate it. Everything's good on your end. If you have any other questions or trade setups, as always, feel free to ping us on SB Squawk and watch the close of the week. It's been some pretty big moves on some things, pretty explosive moves and pretty boring moves on the other. But the longer the time value of these contractions happen, the better the breakouts end up inevitably being. So don't get FOMO here. We're just setting up the April opening ranges. Lots of things to look forward to. Best of luck trading, guys, into the end of the week. Have an awesome weekend. I'll see you bright and early on Monday morning for the free session on daily effects, right back here on Tuesday and Thursday. Cheers.